Good morning. The markets are moving and so are you from the BizNews studios. This is BizNews Daybreak for Wednesday, 21st of January, 2026. I'm Alec Hogg. Here's the context you need to win the day. Rand strength continued overnight, currently trading at 16 Rand 41 to the US dollar. The gold price kept roaring ahead, gaining almost 2% to a fresh record of over $4,800 an ounce. On the other hand, digital gold, Bitcoin fell 3.5% and starts the day at $89,000. While we were sleeping, US stocks fell. Both the S&P and NASDAQ losing over 2%, while tech darlings took a lot of the hit. Nvidia and Tesla lost 4%, Apple and Amazon more than 3%. Donald Trump's latest actions appear to finally be starting to affect investor sentiment on Wall Street. Here's the very latest from Doug Krisner at Bloomberg.
The Sell America trade was back in full force across U.S. financial markets. President Trump's demand for U.S. control over Greenland stoked anxieties about potential worst-case scenarios. Now, that would include a rupture in the NATO alliance or perhaps a full-blown trade war between the U.S. and Europe. It was over the weekend that Trump announced a new 10% levy on 8 EU countries opposed to Trump's plans to seize Greenland. And today, Trump faced backlash from U.K. Prime Minister Keir Starmer and French President Emmanuel Macron, although Trump played down their criticism.
They always treat me well. They get a little bit rough when they're, when I'm not around. But when I'm around, they treat me very nicely. And, I like both of them. They're both liberal. They have two problems, immigration and energy.
Now, as a result of Trump's threats, the European Union has effectively suspended the ratification of the trade deal reached with the U.S. last summer. Here is U.S. Trade Rep Jameson Greer speaking on the sidelines of the World Economic Forum in Davos, Switzerland.
Europe has done nothing to implement the trade deal. Nothing. So it's actually for the EU to say, well, we're suspending it. What are they suspending? Their continued negotiations with us.
Well, it hasn't been ratified.
For example, when we made the trade deal with the Europeans, shortly thereafter, we modified our tariffs to be much lower. We cut them a deal on autos that other people don't have. We cut them a deal on other products other people don't have. Europeans have not lowered a single tariff for us.
That is U.S. Trade Rep Jameson Greer speaking on the sidelines of the World Economic Forum in Davos, Switzerland. After the bell, Netflix delivered fourth-quarter results that largely beat Wall Street estimates. However, the company issued a cautious forecast for the months ahead. Netflix also said it's planning to increase spending on films and TV shows by 10% this year, while at the same time moving ahead with plans to buy the studio and streaming businesses of Warner Brothers Discovery. We got reaction from David Joyce. He is senior analyst at Seaport Research Partners.
They did beat in the December quarter, but it's always about what are you going to do for me next? And while the revenue guide was a little better than expected, the margin was a little bit lighter for the guidance. So I think people are concerned that maybe the Warner Brothers Discovery deal does have something to do with a long-term growth outlook that the management has that might not be as rosy as investors had. I don't think that's yet the case. I think that'll still take time to bear out.
David Joyce there from Seaport Research Partners.
Quarterly results from Netflix certainly grabbing a lot of the attention. The share price, though, dropped 5% in after-hours trading, and that's after a 1% fall on the day ahead of the release of results. It's now down by over 30% since the company announced that it wants to buy Warner Brothers Discovery. It's a major factor for investors right now, and they don't like it. Here's Bloomberg's Netflix watcher, Chris Palmieri.
Investors have been really concerned about the Warner Brothers bid. The stock has lost a lot of money since in October when it first came out that Netflix was interested in bidding. And you still see concern here. I mean, they said they've spent $60 million already on pursuing Warner Brothers. They're anticipating another $275 million in cost for that. They paused their share buybacks, which were considerable. They had $8 billion left in their buyback program, so they can conserve cash for the Warner Brothers bid. So if you're concerned about all this, there's certainly enough in there for that.
But for some, perhaps the more patient, Mr. Market's depression over Netflix is a buying opportunity. Let's hear from portfolio manager Eric Clark of RA AccuVest Global Advisors, who also spoke with Bloomberg last night.
Bigger picture, nothing's really changed with the business. It's just that people have left Netflix stock because of the Warner Brothers, the time that it takes to get a deal done like this. So people just say, I just don't want to have my money tied up in something that's going to be a little more uncertain than maybe, quote, dead money. That's the opportunity. So the stock's down over 30% and business is still doing really well. And at this point where the stock is now, I don't even think it matters what the outcome of the Warner Brothers deal is. You're just getting the stock at a great price here. So you just have to be patient. That's all.
On the JSE yesterday, the resources index was lifted by a strong session for gold shares, not surprising with the gold price doing what it is. It pushed the overall index slightly into the green. Sasol broke out of its recent slide, gaining 3% on the JSE yesterday to move back above 100 Rand a share, and the BizNews portfolio favorite Orion bounced back to 30 cents. That was a 7% gain on the day. But the big winners were gold shares, AngloGold Ashanti up 6%. The debate around black economic empowerment here in South Africa has flared up again after Mineral Resources Minister Gwede Mantashe recently claimed on public television that white South Africans hate BEE because they want to protect white supremacy. Gerhard Papenfus, the chief executive of the National Employers Association of South Africa, NEASA, responded with a blistering open letter. He argues that the opposition to BEE isn't about race, but it's about a system of coercion that benefits a political elite while damaging the economy for everyone else. Here's Papenfus explaining to me yesterday why he believes the current model is fundamentally flawed.
In this case, Gwede Mantashe made certain remarks during a television interview where he said that whites hate BEE because of the fact that we want to protect our white supremacy. And then he made certain statements that, didn't really make sense. And the fact that he said, we don't want to see blacks prosper and take up positions of ownership. So I had to respond to that and just point out to him that he's simply wrong. Also that it's not a question of white anger also. And I think everybody, except those that really benefit, and if you can call it benefit from this scheme, doesn't like it at all. I mean, we detest it. And it's costing the country so much. So I just putting it right with Gwede.
You say you detest it. You don't hate it. I think for some people observing this, that'll seem like semantics. What do you mean by it, though?
The word hate is, there's a bad connotation to the word hate, but it is a terrible thing that what it's doing to the country cannot have any amount of approval from our side or from anybody. He used the word hate, and I just I don't want to use the word. I don't want to be filled with any form of hate. Hate is something that fills your mind, your being, and I don't want to be filled with hate in any way. So, but I think you're right if you say there's an amount of semantics to this, but I mean, we see the impact it's having on the economy and on people. So I just wanted to let him know he's wrong and why we detest this thing and what is going wrong. We see it. We live that daily. We see businesses struggling because of this, because this is no longer a normal economy. No, we don't live in a normal economy. We live in an economy where an unnatural economic structure where certain people gets preference not on the basis of merit, but purely based on political alliance and color.
Michelle's a mom who traded in her Fiat 500 for this beast right here. But why the momentous move, huh?
I needed something bigger to keep up with my growing son and his many sports bags.
When you traded in your car with WeBuyCars, was it an easy conversion?
I see what you did there. The process was just so easy. I was given a tablet, had to sign, and that was it.
Basically, WeBuyCars is no mess, no faff. Okay, it was nice chatting. WeBuyCars, the easiest way to sell your car by far.
I had a different perspective of Davos this year, and it's really interesting to be watching from the sidelines the highlights that are distributed by the various media companies that are there. Bloomberg's doing a grand job. Glad that we've got them as our partners. We also have The Economist and the Financial Times. So we'll be bringing you everything you need to know there, including today's big speech by Donald Trump, which has been, headlined as the major event of the whole of Davos. He's only in Davos for a day and a half, and it'll be very interesting to see how he uses the platform this year. Last year, he did make an address, but that was via video. Well, the CEO of South Africa's most important listed company, Prosus Naspers, made a welcome appearance in the Bloomberg tent at Davos yesterday. He shared where the Cape Town-founded tech multinational is heading. Here's Fabricio Bloisi.
What does your company look like in 2028?
We are going to keep expanding in the position that we have today of marketplace that deliver many real-world services and also e-commerce and payments to really take all the friction, and people can just ask your virtual assistant and have all those services delivered. So we are looking obviously for food delivery consolidation. We are looking for all the adjacencies, so we can really make our customer life easier.
Does this super app or the super assistant, does it have to be European made because of friction with the US and US tech companies?
It's a new world organization. Yeah. You have to do that on Europe. You have to do that in India. You have to do that in Latin America. You have to have local technology that enable those countries to have sovereignty in this kind of services. And that's the Prosus approach. So we have today a big lab of AI in Europe called Prosus AI Lab. In Netherlands, we also launched the AI House in Netherlands, and we are expanding that in Europe and also in India and Latin America.
What happens to your Tencent stake? Do you wind that down?
We are a big shareholder of Tencent. We are a big believer of Tencent. We sold a little more of Tencent lately, but I want to reinforce, I think Tencent is the biggest company in China. It's an amazing company. And during the artificial world...
Will you sell a bit more?
I just announced a few weeks ago that we changed substantially our buyback. So now we are doing a few buyback with Tencent. Yeah. But right now, our buyback is financed more of non-Tencent assets than Tencent. And I think this is very good for Prosus. I think Tencent has an amazing future. And remember, in artificial intelligence world, having WeChat, it's an amazing asset. I think what Tencent can do is just getting started. So we are selling much less of Tencent, and we are keeping our buyback. We even increased the buyback, selling other assets with less future than Tencent.
And if you're wondering why I called it South Africa's most important listed company, well, it is by far the biggest chunk on the indices here in South Africa, and particularly on the JSE. On to a little change of pace now, and a real treat for you. Warren Buffett is known today as the calm, rational oracle of Omaha, famous for his patience and value investing. But the story of how he built his empire actually begins with a moment of pure spite. In this clip from the Business History podcast, a new podcast by hosts Robert Smith and Jacob Goldstein, they reveal the fascinating origins of Berkshire Hathaway. It turns out Buffett didn't buy the company because he loved the business. He bought it because the CEO tried to cheat him out of 12 cents a share. Here's the story of how a petty dispute and a failing textile mill accidentally laid the foundation for one of the largest fortunes in history. It's a short clip today, but you can listen to the whole podcast, and it is truly fascinating. It's a members-only podcast for premium members of BizNews, and it's on the BizNews channel.
It's the 60s, swinging 60s. Clearly not in Omaha, Nebraska. Never really came there. But Buffett's looking around for these tiny companies, cigar butts, and he finds what he thinks is a great one. It is a textile manufacturer also in New Bedford, Massachusetts, home of a lot of dying industries, yes.
Was it a whaling company?
Yeah, exactly right. No, it is a textile manufacturer known as Berkshire Hathaway, right? Just this great regal name.
I've heard of this textile company somehow.
So they make fabric, and eventually they'll specialize in the lining to men's suits. like that kind of rayon sateen kind of thing, right? Now, even in the 1960s, nobody thought that there was going to be a renaissance of textile manufacturing in Northeast United States, right? It just was not happening. Most of the textile mills had moved to the southern United States. They were about to move overseas. This is an expensive, low-margin business, and anyone can make the lining to a suit.
Yes, there is no moat.
There is no moat. So the owner of Berkshire Hathaway was, and I love this name, Seabury Stanton.
Not a Jew.
I'm not saying he was wearing a top hat, but he definitely owned a top hat.
I'm thinking more yachting hat. Like a captain's hat, right?
Course,
Seabury Stanton in New Bedford. That guy definitely
was
on a yacht.
Right?
Yeah.
So young Buffett starts doing his thing. He's acquiring shares of the company, right? Secretly, as he often did, because he didn't want anyone to know that he was accumulating this large position, right? So he looks at it, right? It's $7.50 a share. He thinks the company's probably worth $19 a share.
Okay.
Right? Double, right? But Seabury Stanton also knows the company is too cheap. Seabury Stanton is also accumulating shares in his own company, right? So Buffett does the thing, stops by. Oh, hi, just wanted to stop in and tell you I own a large part of your company. What are you going to do about it, right? And Seabury Stanton says, I know you're buying Berkshire Hathaway, and I want to buy it back. What will you sell it for, Mr. Buffett? And Buffett goes, $11.50 a share. Bought it for $7.50, sell it for $11.50, good profit, right?
Yeah.
And Seabury says, if I make that offer to you, will you promise to take it? And Buffett says, sure. I mean, if it's in the near future, I will take $11.50 a share. Then eventually, Buffett gets the letter from Seabury Stanton. It is not $11.50 a share. Seabury is offering $11 3/8.
3/8, because stocks traded in eighths at that time. And so 3/8 is
1/8 of a dollar less than he promised.
What is it? It's like 12 cents. So it's like $11.38 instead of $11.50.
Yeah. Buffett goes ballistic. Right? Like,
this is not the bottle cap I was promised.
So this guy's trying to chisel me for 12 cents.
And Buffett's in at $7.50 a share, just to be clear. It's still Buffett basically says, a 50% return.
Buffett says, I don't want this company, but I certainly don't want Seabury Stanton to have this company. And Buffett says, I'm not going to sell. I'm going to keep buying and keep buying, keep buying. And suddenly, like the theory, right? You're going to take a few puffs off the cigar butt and throw it away.
Yeah.
All of a sudden, he controls the company.
He's chewed up the cigar butt and swallowed it.
And he's like, I have a dying manufacturer in, frankly, a dying corner of the country, right?
Shout out New Bedford.
He would later call it his biggest investment mistake.
And just to be clear, as one knows, the company he controls, the company that he rode to fame and fortune, is called Berkshire Hathaway.
Yes, they shut down the mills eventually, 1985, right? There is no textile manufacturing Berkshire Hathaway now. But he kept the name. It became the company that he used to buy other companies and to grow this empire. And I think he keeps the name just to remind him. I think there's some sort of moral in it for him.
It was this moment when he acted irrationally.
And now you have the edge. For the full interviews, and including that one on the young Warren Buffett, and the details behind these stories, head over to biznews.com. I'm Alec Hogg. Thank you for starting your morning with us. Now go and seize the day.